Hi and welcome back to today's morning report on Wednesday the 11th of March with me, Richard Perry, market analyst at Handtech Markets. Moving on to the euro now, and this euro downside continues, and it's when's it going to stop is the big question. Well, it's difficult to say. Obviously the bears are well in control of this one, pushing euro strongly lower, down another 50 points today. And it doesn't seem as though it wants to stop at all. We're now sort of looking at the 61.8% fib projection, which is the projection of this bear market move that then consolidated and then measured from the 1.1532 level. And 61.8% level comes in at 106.17. So that's your next projection. It's not too far away from that now, 106.42. And if it starts to trade clear of 106 to the downside, then you've got to now start to think about almost parity. 100% fib projection is at 1.0052, so almost back at parity. Momentum indicators just awful across the board. MACD lines accelerating away now. Stochastics still falling, so bearish. And the only thing I can really point to on this chart that the bulls have got any real scope for being positive through is the RSI at 17 now, almost 17 on the nose. Now that is exactly where it came back to in January before the rally set in, and also back in September before the rally set in. So it's 16th spot, basically 16 and a half there. So before you started to see a consolidation, so that would suggest that you're not too far away from a consolidation perhaps. And as I said on that dollar index from my main chart analysis, my main overview, that dollar index is up at 90 on its RSI as well, which is looking overstretched. So you're sort of maybe not too far away from where we're going to start to see potentially a bit of a consolidation on this euro chart. But consolidation doesn't necessarily mean a technical rally. It might just mean it'll go sideways, but a consolidation nonetheless. So yeah, I think the takeaway from that would be that the downside potential that you've got on this euro chart is becoming a little bit limited perhaps. But if you look on the hourly chart, nothing wrong whatsoever with that sell-off. I mean, every time it gets back to that 21-hour moving average, it pretty much gets sold off. A little bit of consolidation a couple of days ago, but bang. That was the then once again 21-hour moving average coming in as the basis of resistance. 21 hours at 106.96, so basically 107 figure at the moment. Look how bearish these momentum indicators are. RSI, any time it gets towards 50, maybe even sort of mid 50s to 60, it gets sold off. And then back below 30, so that is really bearish. MACD lines consistently below neutral, bearish, and also stochastics bearish as well. So you're still looking to sell any sort of rally on this euro, but as I said, just be careful for going sort of really short, because you're just beginning to get to the realms of where basically everyone in the market just thinks it's going down, and there could well be that you're getting pretty overstretched on this euro chart, but nothing too significant yet in terms of support. And even in the last couple of hours we've broken back towards new multi-year lows again. It's just that I'm just beginning to get a little bit worried about how oversold this euro is, and we could begin to see a bit of consolidation in the chart. Anyway, in terms of resistance, you'd say you got to zoom in really for any sort of real sign. Initial resistance 107.16. Bit of a rally high from 107.92 yesterday, but generally around 108.20 was the reaction high from yesterday, and also the lows from Monday, overnight Monday. So that is your basis of resistance really, 108.20. So something to go for there, but certainly it looks still bearish, but I'm beginning to get a little bit concerned as to how bearish it looks, and the fact that it's going so oversold. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.